Good morning, everyone. Thank you so much for joining. I see some folks still signing in, so we may wait maybe a minute or two. But hi, Tom. So we have Lori Choi today from Veris Wealth Partners. Thank you so much for Lori for joining, and I know it's so early in the morning for you. So, if you give I'll give you a small introduction, a short introduction on Lori. Lori is a partner and senior advisor at Veris Wealth Partners in New York, over 17 years of experience in wealth management. Passionate about creating positive social and environmental impacts. She's helped individuals, families, and foundations align their wealth with their values. Lori previously held leadership role at Market and Bank of Hawaii, where she managed over 170 million in client assets. She's a Wharton graduate and she co-founded Women Investing for Sustainable Economy, WISE, where I met her, fostering sustainable investing and women's leadership. She resides in Dallas with her family, which means it is very early in the morning for her now. And thank you again. And with that, here is Laurie.
Thank you so much, Sujin, and really thank you all for joining today. When I heard from Sujin about this Climate Bridge Korea New York program that she was putting together, I thought, I'd really love to support it. I am a Korean American. I was born and raised in Honolulu, Hawaii, and also spent the bulk of my career in New York City. So just really happy to help bridge these communities and be part of this program.
Thank you.
Thank you. So today, as the title suggests, I'm going to be talking about investing in climate solutions for families and foundations. That is my focus at Veris Wealth Partners. I am a senior advisor and partner, but I get to work directly with clients, really helping to understand what their values are, what their impact priorities are, and try to create a portfolio that feels aligned, and we work across asset classes, and so some of that includes climate solutions investments. Some of them they do have other interests as well, so I'll go into that, but just wanted to give that backdrop. Let me pull up my slides here. So today, talk a little bit about Veris Wealth Partners so you can understand a little bit of what a registered investment advisory firm would do in terms of like due diligence, how we think about where maybe a climate investment opportunity would fit in the portfolio. And we have a couple of sample climate solutions investments. So you have a sense again across asset classes of what we look at and have put clients into. And then some resources just of other networks, other communities, groups, things that you can Google after the call to learn more and dig in. All right, so Veris Wealth Partners vision and mission, just so you have a sense, we are really focused on creating an equitable, just, and sustainable world through our little corner of the financial markets. So we utilize financial markets to direct capital to sustainable and regenerative endeavors. And we just believe that there are more and more people who are passionate about this that are, even despite recent results last week, we do think that there are people who want to invest in climate solutions and are excited to do that. As we think about working with an individual or family or foundation group, this slide is mostly geared towards individuals and families, but we gotta balance the financial aspects of what they need, whether that's, I need to take money from the portfolio to spend for my living, or I need to think about taxes and fees and be very low cost, or we have certain return goals that we have, so we're balancing that piece plus the impact, so mission and all the things they care about. Sometimes these things relate to philanthropic priorities that they have as well. But generally speaking, it's just things that they care about, things that they would like to see reflected. It's kind of a congruency thing that in all areas of their life, they would like to see alignment. And so we do this through different strategies within the portfolio. We help them articulate their guidelines, kind of like an investment policy statement. We help them set priorities. And then within public stocks and bonds, we can positively tilt or negatively screen. We can also set goals for direct impact investments, which is maybe where some of these climate solutions would more fit into if you are a startup or a fund. And then we also do shareholder engagement and proxy voting again on the public market side. At Veris, we have clients with lots of different impact priorities, but just to say there are some 4 key pillars that our clients tend to be interested in that we focus our due diligence on. On the top left-hand corner, you can see climate solutions and the environment. Other areas that we believe are intersectional and often interrelated, sustainable and regenerative agriculture, community wealth building, racial and gender equity kind of all come together. And so sometimes we are finding investments that cover multiple of these themes. I mentioned already that we invest across asset classes. This slide just kind of reiterates that, nowadays our investment industry offers many, many opportunities for mission alignment, values alignment across all these asset classes. And so it's just really exciting to be able to work with clients these days because there's a lot of innovation and very high quality fund managers and entrepreneurs out there to allocate to. And for those who may not be familiar, there are, opportunities within, cash, community banks, things that are really mission focused, and then fixed income that are where you can direct either by geography where someone lives, if they care about that community, or, in public equities, again, the public markets positive and negative screening, and then alternatives. We do have a lot of these different asset class opportunities like private equity, venture capital, real assets, mostly private debt. So yeah. For us, we mostly look at funds. I know some organizations in this industry, look at direct deals as well, so individual company investments. For us, this is just a big overview. So of course, there are lots of inbounds that come to us. We are looking for this combination of opportunities that fit those kind of 4 primary impact themes, things that we're hearing from our clients, like what the demand is. Hey, I would like to invest in this theme or that theme, solve this problem, help to be part of a solution here. And then we look at all the quantitative data, and then as it's a back and forth between the advisors being surveyed to say what's the client demand, and then them understanding what were the funds out there right now that are available and open, and what are we hearing from these different conferences that the investments team is attending. And then if they decide to do the full due diligence on them, then we take them through this in-depth analysis and interviews. We call it the 6Ps evaluation process. People, of course, just really understanding the firm and the team. We also spend quite a bit of time understanding the diversity of the fund manager at all levels of the organization. So people of color, which would include, people, Korean, entrepreneurs or fund managers. That would be very exciting to be able to share kind of the diversity of your team. We do believe that diversity matters, and that diverse teams are smarter teams, generally speaking. So that's why we include that in our process. Of course, investment philosophy and process, we want to understand all of that. And we also assess the inclusion of an EDI lens in the investment process. And that's, again, just understanding, hey, is your strategy helping communities of color by chance? Is that an intentional thing that you're doing? And sometimes our clients are really excited to support programs like that. But we do look at also just pure climate strategies as well. Performance, of course, product, looking at all the operational aspects of investing, and then impact. So here we'd really like to see the impact thesis being very strong and tied to the financials, so that the more financial success you have, the more impact you're having, and these things go together. Manager selection. So this is just, once we have all of that information, we have a strong understanding of who all of this about the fund, we will take it to the investment committee and they will do some voting. We have ongoing monitoring and understanding with our approved list and annual due diligence questionnaires that we send to our team, our fund managers. This is just a really quick snapshot of a sample portfolio so you can have a sense for me, we tend to work with all assets of a client's portfolio. So it is going to be pretty diversified. And so if we just look here onto the bottom 3 rows here, tends to be kind of the alternatives allocation, which can be anywhere from 5 to 15, sometimes 20%, but, generally speaking, it's in that range for us. And typically minimum fund sizes are like around $250,000. You can see there's a lot of, typically we need some liquidity in the portfolio and some income. So there's cash and fixed income in the portfolio. And then, there might be, kind of a mix of different stock strategies within this 50% allocation here. Again, customized screening. There have been thematic funds that we've invested in that are like public markets, but climate solutions oriented, and then other strategies in this portfolio too. So I'll talk a little bit about some of the examples that we've invested in. This is a sample impact manager of a venture capital fund. And this one invests in early stage growth companies focused on, you can see here, environmental solutions, clean energy, including solar and battery technology, food systems, and clean agriculture. So this is a fund that they are on their 5th fund now. They've got kind of 10-year term, 1-year extensions, 25% net IRR, kind of standard terms, if you will. They are mostly based in North America, in the US, and they do a bunch of different strategies over the years. They have invested and had exits, for example, in ZEP Solar, and they have some opportunities in PFAS, kind of programs that reduce the impact of PFAS. And this is an example called ambient photonics. So this is trying to help these batteries to be less harmful in terms of their technology and the greenhouse gas emissions that are emitted. So just the toxic waste, getting rid of that. So that's important. We also have this other fund that kind of incorporates racial and gender equity here, as well as climate solutions and the environment. So they are looking also at creating quality jobs in underserved and low and moderate income communities in the United States. The fund is run by a woman who is a BIPOC owned owner, and they're looking for entrepreneurs and companies led by women and BIPOC owners that have tech-based manufacturing firms, and actually like an import-export kind of relationship in terms of having international sales. So their companies happen to be related to the environment. And so OpConnect is one here. So they are helping to provide this company with investment opportunities so that they can invest in their charging stations and wide adoption of EVs. So this is one example here. You can see we kind of, every fund and strategy is going to track their own impact metrics. And so we just kind of take what they provide and try to put that into standardized metrics when we're evaluating them on a quarterly basis or annual basis when they report on their impact. This is a private debt example. This is investing in power generation, energy infrastructure, debt securities of small to mid-sized clean energy or clean infrastructure projects. So this is a private debt fund. The fund life is more like 6 years. It's a 9 to 12% net IRR. Some clients prefer something a little bit more stable than the equity, but this is very thematically focused around climate solutions. And you can see how they track their metrics here. Another example of climate solutions in real assets is a sustainable forestry fund. So we are working with this fund that buys land and forest land, often operating timber operations, and they take them through a process of becoming sustainably certified in terms of their operations, and they help to just improve the land. They improve they have like mitigation banks. They sell conservation easements on the land. There are just lots of different ways that they are trying to improve and conserve the land and at least sustainably harvest any wood from there. It has a 12-year life plus 2-year extensions and 8% net IRR. This is an example of a public equity strategy that is, for clients who just need more liquidity or don't have for whatever reason, the qualifications or desire to be invested in private markets. This is a public market strategy that invests thematically in these different areas like new energy, clean and efficient transport, smart environment, sustainable food, circular economy, and water. So there are lots of different opportunities to invest here. So I'm just running through everything and we'll have time for questions at the end, but I wanted to also make sure I covered resources so that, this is just a starter kind of conversation and that you have lots of places to go and look into after this call. So there is a directory of values-aligned advisors and consultants. It's called Values Advisor. This was really started actually for high net worth investors to look and search for advisors, but they have some resources on there if you're interested to look at what other asset allocators are out there and consultants. Asset owner membership communities. There's Confluence Philanthropy. This group works really specifically with foundations that are really interested in doing mission investing. So again, all of these groups will be wanting to will be interested in climate investing. Tonic is a high net worth community as well, kind of a peer-to-peer group. They do a lot of education. And so that would be another one to look into. Gratitude Railroad, also high net worth investors kind of coming together to understand impact investing. The impact is ultra high net worth families, I would say global. Many of these groups are global, like Tonic as well. But this is more ultra high net worth, I would say, and very focused on having an impact. Prime Coalition is really focused specifically only on climate, so that's something to look into. Many of these groups are hard. It's not necessarily like an easy way to get into per se, but in terms of, they might ask for sponsorships or whatnot, but you could still kind of just understand more about these groups, I would say, and I think it could help you as you get to know people in the industry. Nexus Global Youth Summit is they have several conferences globally, one in New York in June every year that I tend to go to. This is for next generation kind of family, multi-generational family wealth holders tend to go to this, as well as philanthropies and kind of impact-oriented companies and funds tend to go, and it's a way for them to connect and educate next generation family members to do more impact in the future. If you're looking to raise capital very specifically, there's a group called Big Path Capital that focuses on impact-oriented companies and funds. They do a number of different kind of roadshows or convenings throughout the year that might be helpful to know about. If you're part of a fund or want to get your fund more recognition, this is the Impact Assets 50. It's every year they look at different impact investment funds and they kind of rate them, and they have emerging fund manager categories and things like that. So you can also find other funds. Let's say if you're trying to find a fund manager that would be interested in your climate tech startup, that could be an interesting way to look for funds that are reputable. And as Sujin mentioned, we met through WISE, which is a community for women investment professionals. So if you identify in that way, love to have you. You can check us out at wisecommunity.org. Okay, so that is it. I mean, I would love to just open it up for questions, or Sujin, if you have any thoughts or guidance. Yeah. This is my email. Feel free to email me. That's probably the best way to reach me. lchoi@veriswp.com.
Mm-hmm.
Take off my screen share.
I know you have a lot of appendix in the back.
I do.
Yeah. So I'm sure you have, I mean, the audience has a lot of questions, but the first question is, I see that in different instruments of investing, and there are some time horizons. And I'm just wondering, like, how does your clientele look in terms of the time horizons in their investing? Because as a climate tech is usually longer term than the shorter term. So if you can kind of share their views on how they look at their investment horizons.
Yeah, so I think for a portion of the portfolio, they are often very willing to do that. So again, in that kind of alternatives bucket, let's say up to 15% of their portfolio, they're very happy to consider long-term investments. I mean, again, our clients tend to be invested in funds, but some of them do individually go out and, they learn from their friends, or just being out in the world, understand that there are sometimes these startups that require really, really long-term investments. And so we just kind of help them, depending on the stage, if it's angel or, really early stage and seed, they might say, look, I don't have like the standard, target performance things necessarily in my mind, or it's called this concept of patient capital. I think they have, if the mission and impact is really on target to what they care about, they would have, a little bit more flexibility on these other aspects, generally speaking.
Okay, great. And also I see that every page for your investment thesis, I see that impact, like measurements, impact scores. And how does it get decided? That decided, or does it come from the funds that you're investing in, or do you have an internal criteria for that?
Yeah, because every strategy tends to be, tracking different types of metrics. We do start with kind of the ones that they provide us. And oftentimes, or in some cases, we have done side letters to kind of require that a fund provides a certain amount of impact reporting. So I think it's an interesting thing that I think the industry is trying to become more and more standardized on. I think whether it's the Iris Plus metrics that they're using, or looking at SDG goals in terms of how they're sharing, like what they're aligned to. Like it really depends. But I think some of the definitions around greenhouse gas emissions, kind of like, things like that can be very clearly shared. Yeah, I think it just depends on what they're trying to accomplish.
Okay, okay. We have a question from Tiffany. I'll just read it loud. Do you have certain size requirements for the funds that you look at? You also mentioned you look more at funds versus direct investments. What makes a direct investment stand out when you would invest in it?
Mm,
Mm,
the Yeah, it's a little bit of a business model question, frankly, that
mm,
like at Veris, we have a 5-person investments team. And so I think, and our client size is also kind of, it's growing. Like we've got some new $100 million clients this year, but legacy has been in the range of like kind of the 5 to $15 million range. So for them, a lot of direct deal investing doesn't always make the most sense, or they don't have the risk tolerance for that. But I would say there are firms in our field that do look at more direct deals. And so again, maybe checking out Values Advisor. Um, yeah, I mean, I think the companies that we have considered anything is probably like sidecar deals with fund managers that we already work with, where a portfolio company needs additional capital. That when a client's been very excited about one of the holdings, I think that's been probably some of the few opportunities. Again, if it's a client demanded, if it's something that our client came up with and it's something that they just, they're like, hey, I would like to do this, do you see any red flags? Sometimes we'll look at some deals that way. But often it's not something that we're going to do the full due diligence on, because if it's truly a startup, sometimes for us, it's hard to, I mean, in general, right? It's hard to diligence, but it's just probably also our model is not the best for that. But like something like Align Impact, for example, I've had friends that work there. They are doing a bit more for sure as well on direct investment.
mm, mm. Okay, interesting. Any other questions you may have from the audience? Hmm.
Hi, Tom.
Yeah,
Mm,
hi. I hear more and more about people using their donor advised funds
Oh,
to
yeah.
make green investments, or in other words, sort of a mission-driven investment philosophy. Uh, my experience has been that a lot of the major organizations like Schwab and Vanguard are very reluctant to uh, go through the paperwork for this. Uh, what are you telling your families about the ability to use a donor advised fund, but target specific investments?
Yeah, great question. We work with Impact Assets a lot. So they are the organization that also does the Impact Assets 50. So we definitely recommend clients to, well, first of all, set up a donor advised fund for multiple reasons, but that's another place that they can do impact investing. So for clients that have, let's say, an account over $250,000, we will often be able to advise on that piece of the portfolio. And so we can make custom investment recommendations inside their DAF. And we've never had if an investment opportunity be declined by impact assets, in the sense that they're really open as long as it's, having some kind of a positive thesis kind of impact. They are really happy to kind of take on all the paperwork, all of the diligence. They do annual reporting. We've even done custom like debt promissory notes in Africa, like with a client who just like gives philanthropically to an organization that needed debt financing. But they've also we've had clients do startup investments there too. That's a great point. I should have mentioned that.
mm, mm, mm. Thank you. Mm. Any other questions you may have while we have her?
Well, just for companies trying to raise money,
Mhm.
uh, let's say they're based in Korea, just to find an example. Uh, is this a market that they should include as they start to reach out to investors? Should they be coming to people like you with startup opportunities, or is that just not a great use of time because the amount of time it would take and the size of the investments may not uh, be worth their time?
Yeah, it's a good question. I think it would maybe be fruitful to work with funds. I mean, I guess that's a question. Do startups want capital that is part of a fund? Is that not an ideal, like, or I think you can go either way. I've heard, some, if you can get to the asset owner, they're the decision maker ultimately, right? And so in a way, advisors I've heard can be a bit of a gatekeeper, right? So it is tricky, and we have a little bit more process we have to go through. So there are different things different strategies I feel like for example, within the Nexus community, I've heard that, kind of startups, in relationship and in community, they've been able to raise capital just because they're part of the community and they can kind of person to person explain and with passion their organization and get funding that way, whether through donor advised funds or other sources. I think another effective way is going to fund managers that are exclusively impact focused. So, to a climate fund manager that is looking for, new investment opportunities, I would assume that would be a good way also to get capital. That might be a more direct and faster way to get capital than trying to go after like the bigger firms or the advisors that have a lot of diligence process. But I have heard that, family offices are very patient. They tend to be, again, if you're thematically aligned with their priorities, they're maybe willing to be able to send capital. I don't know what your experience has been, Tom. I'd be curious to understand.
Well, I tend to talk to companies that need money, and
Mm,
I say try to find the families directly rather
mhm,
than going through funds because it depends on what their investment process is, and it often has more steps and takes longer as if you go through a fund. But
mm,
sometimes the actual high net worth family will make a decision much more quickly, and so
yeah.
you get your money faster. So just a follow-on question. Uh, I've seen that there's a lot of groups that have popped up to do small investments that are in diversity or in green. So a company like this would be Raise Green, which seems to be offering up uh, much smaller, like 10,000, 20,000. Do you have experience? Is this a cost-effective way to maybe get the next generation to get them a small investment? So you now own, let's say, $5,000 of a solar project in a low-income community. Is that uh, a legitimate asset class, or is this something that can't sustain itself? They can't make enough money packaging these deals. So, as nice as it is, they may not be around to manage the investment for the full life.
That is a good question. I am not as familiar with that group yeah, that probably is more of a direct to consumer kind of offering. So I think it's a little tricky. I mean, I think a group just in a slightly different context. I mean, Calvert Impact Capital, offers, impact investing through very small minimums, like I think as low as $20 or something. And you can earmark your investments to certain impact themes like climate solutions. But I think what you're talking about is a little bit more even direct or connected to that. But they spend a lot of money probably on marketing, I would assume. And so it's a good question. I don't know if that business model would be around for a long time. I think it is hard to sustain that, but I think it's great. I mean, I think there are other platforms called, is it Republic? No, I want to say, let me see if I can find it, but I think there are other ways that in general companies are able to invest. I'll find
Is
where.
Publix
Yeah.
one of those crowdfunding that has been
Yes,
flourishing?
that's
Yeah,
Okay.
right.
we
Yeah, so I
probably,
could see that kind of a model
yeah,
working. Mhm.
yeah. Hmm.
Oh yes, Tiffany knows.
Yes.
Yep.
Okay, great. Okay, thank you. So how many how many funds do you have in your portfolio? How many of yeah,
Like on the approved list, it's
yeah.
about, I think about 100,
Mhm.
but it's across asset classes. And every year our team is probably approving new private markets funds, probably about like in the six range, like the 4 to 8, but generally on average, probably about six per year.
Mhm.
So yeah. So for us, that again, that's like it's it's not it's our business model. There are other asset allocators that do more just pure diligence all year long.
Mhm.
But yeah, so that tends to work for our clients.
I mean, is the list public that you have, the funds that you investing in?
No,
Yeah.
no, I'm sorry. It's not public,
Okay.
but yeah, if you have specific questions on, anything, I can share that.
Yeah, that would be great. Thank you. Because a lot of us in this room, are helping someone to raise money or yeah, or they are raising money themselves. And so it will be great to have access to, those kind of funds or ideas
Well,
of
that's why actually the Impact Assets 50 might be a good, they have a database. Let me see if I
oh,
can pull it out. Okay, so Impact Assets, this is the donor advised fund that I mentioned. They allow people to create donor advised funds and do custom impact investments.
mhm,
So they have a database here where you can look at their fund managers. They've got 78 for 2024, but they have all the prior years as well.
mhm.
And you could, let's say, focus on clean technology, et cetera.
Oh,
And you could also focus on geography and so yeah, and so it'll tell you kind of who are the fund managers operating in these themes and areas.
mhm,
And so you could, potentially look into them and reach out to be like, hey, I have, a company that would be really aligned with the mission of your fund.
mhm,
So I think that would be a good way. And these have been already kind of vetted by Impact Assets 50. So I think these firms are likely to be around and,
mhm,
are successful in doing their work. So
mhm. Oh, wow, that's amazing. Thank you for sharing.
yeah, I can maybe put that in the chat.
Oh, I just did.
Oh, you did. Okay, great.
Yeah, 50. Oh, okay. Okay, that's great. Okay, that's amazing. Wow. Okay, thank you. Um,
Yeah.
do we have any other questions, Lori?
I might have a couple of I'll go through a little bit of the appendix, maybe not but
Great.
just couple of things, resources again. Oh, this is our EDI manager due diligence framework. So again, this is on the fund level, but if you're trying to market, it could be interesting to consider the team and how that could be communicated. Um, for us, I'll just explain. We do due diligence by understanding, their diversity data, kind of how they're integrating EDI, equity, diversity, and inclusion into their investment strategy. We'll classify them as one of these kind of categories, and then we'll reassess them annually. But really, what that means to become an EDI firm, that means you have a diverse team of 30% people of color and women, and you have some sort of detailed EDI commitment and plan.
Mhm,
Investment processes, maybe your team is not diverse, but you are really trying to take an EDI lens in the investment process. So the companies that you're investing in have some diversity, or that you're engaging in topics um, to push for more support for diverse communities,
mhm,
or engaging in private placements that support those communities. So if you, I think the reason why we do that is that if you're trying to solve a problem for a community, ideally you want to have people from that community helping to solve and, provide their experience into that strategy. So I think there could be ways where, the entrepreneurs that are part of Climate Bridge maybe have a unique lived experience that, helps them solve problems uniquely. And so really just kind of bringing that out as to, in terms of why that makes them a stronger entrepreneur
Mhm.
or, company. So you'll probably get the slides later, but there is an impact report that Veris does every year. We're about to launch our 2024 impact report, but this is our 2023 impact report. You can click on this later. But yeah, it is going to just share the impact metrics of all of the funds that we invest in on behalf of our clients. It gives you metrics on our diversity scoring and how we stack up against our own metrics, as well as, talks about our company has set net zero targets. We've committed to that. We're also a B Corp. So report on those scores. So B Corp is another database you might, yeah, or if the organization wants to become a B Corp, that could be interesting. There's a lot of community programs that they create for entrepreneurs and funds. And so that's a resource for you if you go on our website or Google that could be helpful. We also recently just set out a report called Investing in a Just Transition. This relates to climate as well as racial and gender equity and community wealth building. Just the concept that in the United States, we are going to be going through a clean energy transition. And we just want to make sure that communities, low-income communities, are not left behind in that transition, that they have access to clean and affordable energy. And sometimes that requires, investing slightly differently or looking for different things. So some of the programs are a little bit more patient capital, I would say, things that are, targeted towards low-income communities and maybe in some cases have some more catalytic approach. That's another strategy. Some foundations are doing what's called catalytic investing. So investing that is, maybe more risky than they would normally take on, but because the impact is straight on the mission, that could be a reason why to do something like that. They want to build in the field intentionally.
Mhm.
That's another thing to look for, or maybe in terms of messaging, kind of talk about how an investment in your company or fund could be catalytic.
Mhm. Okay, great.
So yeah, I'll stop there.
Okay, great. Well, thank you so much. Is there any questions that we can ask, Lori? Um, okay, if not, this has been very, very helpful, very informative session, and thank you so much for doing this so early in the morning. And yeah, thank you. And if anybody, can I share the presentation with others?
Yes, of
That's
course.
great. That's great. So if you need the presentation, I'm happy to send it to you. And if you need to have any questions, just feel free to contact me or Laurie. Well, thank you again, and then look forward to seeing you again soon. Thank you. Have a
Thank
very
you.
good day. Okay, thank you.